Okay, everybody, why don't we get started? Hey, everybody, welcome to the Next Generation Lending webinar. Today, we are going to talk about data and how to make data your competitive advantage. And we're going to particularly focus on what has come to be called alternative data. We're going to try and define exactly what that is. We're going to share some examples. But most importantly, we're going to talk about some practical applications about how you can use alternative data to make better and smarter decisions. Quick introduction of myself. I'm Don Chapman from Powerlytics. We are an alternative data provider. We help banks, credit unions, and lenders make better risk and marketing decisions. And we do that by leveraging two proprietary databases that we built, essentially IRS tax return data that covers every US household and every for-profit business. Before I introduce my esteemed guest today, a couple of housekeeping points. We are on a live webinar, of course. If you have any questions, please put those in the chat. We'll have some time at the end for additional questions. And of course, we're recording this, so you will have access to it once the webinar is over. So now to the man of the hour, I'd like to introduce my guest, Nathan George. He runs partnership strategy for GDS Link. He has a deep background in both credit and data. I've known him for a few years, and really smart guy, really knowledgeable when it comes to both credit and data. I've learned a lot from him, and so expect to learn more today. And I think it's going to be a great conversation. Nathan, welcome to the webinar. Great to have you here. Why don't you start by introducing yourself, maybe telling us a bit about GDS Link, and then before we dive into data, I know that you're talking to credit risk leaders every day. Would love to hear what they're thinking about in terms of both challenges and opportunities for 2026.
Yeah, thanks, Don. Really appreciate you inviting me on to the kind of the kickoff event for your webinar series. Glad to be the first guest, and as always, good to talk to a good friend. So,
Absolutely.
really looking forward to it. Yeah, so you cover the main bases. Nathan George. I'm based in Sonoy, Georgia, a little south of Atlanta, which is where they filmed The Walking Dead. So hopefully I won't go zombie on us while we're on the call. Um, I do lead our partnership efforts at GDS Link, and it's when we talk about what's changing. Uh, Interesting things that we're hearing. Like one thing that just floated across my radar just earlier today was one a new category that Gartner, a Magic Quadrant that Gartner Group introduced called Decision Intelligence. And it's really great to see what they're doing. They're combining what GDS has been doing for almost 20 years now, and that's um, decisioning plus data plus execution, right? How do you not just add more data to your,
Mhm.
to your origination flow, for example, not just adding a whole lot of data sources, but how do we do it in a way that's smart? How do we do it at a fast pace? And how do we do it in a way that really helps us accomplish our goals? So kind of combining that decision, that action with the data analytics and intelligence. And AI is certainly accelerating our capabilities of doing those things. So I'm starting to change our, who is GDS and what we do in decision intelligence. Just
Great.
seems to be like a perfect new way of describing that. Um, you asked like what are we hearing from clients? I think last year we heard a lot about fraud. AI certainly enabled fraud efforts across at a scale and across such a large range of vectors that was a real urgency. People who had not been targeted before were now being targeted because fraud rings could do it at scale with AI tooling. Um, we're starting to see that change this year, and back to growth. That's been a real
Mhm.
initiative for a lot of our clients and a lot of the people we're talking to is how can we grow, but we want to be able to do it in a way that's smart, that actually is effective at our goal, whatever that goal is. Maybe
Yeah.
it's profitability, maybe it's saying yes to more people seems to be a pretty common one.
Yeah.
I think those are the real keys. There's a lot of
Great.
noise out there about, uh, how great this data source is, how great this cash flow underwriting score is, things like that. But really, it's being able to prove that.
Yeah,
and to do it at speed through the year, not just one or two initiatives, but testing a whole lot at a fast pace. That certainly seems to be the common theme.
great. Yeah, well, so data obviously is key, as you mentioned. Being able to test faster, smarter are critical. And so we'll dive into all that. And I think what I want to do is essentially is we focus on alternative data, really go use case by use case. We'll actually start with underwriting, which is kind of down the acquisition funnel because that's I think the most mature area. Then we'll kind of go up and we'll talk about acquisition pre-screen where alternative data can be used. Then we'll kind of go through the
Sure.
customer or member life cycle, maybe all the way to collections if we have time. But before we do that, how would you define alternative data? Like, what is your definition?
Yeah. I mean, well, being in the alternative data space, I feel a little intimidated that I'll define it in the same way as you guys do. But um, the way we look at it as, information that's pertinent to credit risk, but isn't part of the standard trade line credit history reporting that goes back to the bureaus. I think
Yeah,
that's kind of the broadest explanation of the way that we look at it.
yeah,
So, whether it's BNPL data, whether it's bank data, rent utility data. There's tons of unreported source, and of course the type of data that you deal with the Powerlytics. Those are all things that kind of fall under that category. It's
yeah.
starting to get a little blurred though, because a lot of the bureaus realize the power of alternative data and are starting to incorporate it in their scores
Sure.
things too. So the lines are blurring a bit, but I think that's at its core a good way. Another good way I've heard, not original with me, is looking at it across willingness to pay and ability to pay.
Yeah,
So an alternative data can work in either of those categories depending on the type of data that it is. But traditionally bureau data has been more about the willingness to pay. Have they paid in the past?
as opposed to ability. Yeah,
Yeah, yeah.
yeah, that
But
makes
but
sense.
it's certainly becoming really obvious that to keep a competitive edge, alternative data is becoming more and more common, especially in lending origination credit risk
Sure.
decisions.
Yeah. And so let's start with that. Let's start with underwriting. Like, what are the solutions you're seeing in the underwriting space?
Yeah, I mean, probably the most common that we see are things related to, income and employment.
Yeah,
That I would say that's probably one of the easiest. There's been a big push at cash flow data, but some of the friction that can bring and some of
yeah,
the regulatory, ups and downs, there's still some question marks about that. And it's certainly a powerful data source, but I think there's a lot that can be done with other data assets that are out there in combination with those things
sure.
that can give you some really unique capabilities. So I would say, yeah, that income and employment or even assets
Yeah, yeah,
owned, those kinds of things can really help.
sure. Yeah, I mean, I guess what I see is that there's a variety of income solutions out there, right? I think they all have a role. Some work better for different loan types, different types of segments. Some lenders actually use a waterfall, right? They leverage
Yeah.
multiple income sources depending on the segment or the situation. I think one thing that we hear, at least the lenders that we work with, the banks, lenders, credit unions, is that they're pretty focused on getting full coverage, right? There's payroll solutions out there that don't really, they might deliver a good solution for those they cover, but they don't deliver full coverage. And then they're really focused on avoiding adverse selection. And I think certainly as you go from the world of uploading documents to clicking a plaid link to get bank data, that's an improvement, right?
Yeah.
However, that still adds friction. And like Powerlytics solution is completely zero friction, right? And so when you add even any friction, you can cause drop off, which can result in adverse selection, right? The people who really need that credit are going to end up completing the process. Those who are maybe a little more on the fence, probably the better credit risks, might drop out of the process, and then you don't get that really ideal good, sort of good to bad loan balance mix that you're seeking. I mean, any insights on kind of where you're seeing cash flow underwriting? Because we hear a lot about that. Like where do you see that working best? Any insights on that?
Yeah, I mean, it's there's some real big advantages to cash flow underwriting. It is really a great picture of overall affordability and what,
Right.
how much capability somebody who's borrowing money has to pay it back. And
Yep.
you get shopping signals and shopping triggers in there. And you
Sure.
can even look at things like account management through it. However, the other lever, you kind of alluded to it. It's not just coverage and friction, but the other kind of leg of the triangle is cost
Yeah.
and origination cost. And I think one thing I've seen, and I'm not maybe not answering your question directly. One thing I've seen is that the you really can't just rely on one, the old reliable pieces of data anymore to be
Yeah.
competitive. And within your origination workflow, we're starting to see the ability to have complex strategies that are more relevant depending
Yep.
on the channel that they came in on, what they look
Sure.
like, what you find out in the middle of the origination process about their credit history or cash flow or income or anything else. Being able to customize your offer as it's moving through that decision
Yep.
using all the data that's available. Like you've got those three levers, use them to your advantage to offer something that's a real value to the client and differentiates you. Because if you're not doing it, your competitors for sure doing it.
Yeah. Yeah. And I think as I think about friction, right? Like the deeper subprime you go, probably the more like you get like in those low 500s, that friction might be okay because you need to really understand what that individual is looking like.
Yeah.
As you get farther up, you might drive more adverse selection. And then depending on the loan size, right? A $5,000 personal loan, that adverse, kind of that friction might be more of a problem than for a larger loan size for a more important purchase, that type of thing. Talk to me about you talked about multiple sources, right? Like what role does and you talked a bit at the beginning, what role does GDS Link play in enabling all
Yeah. Great tee up for us. Like
that?
when you think about, I mean, data orchestration for sure. GDS has 20 years of data orchestration that's not just connecting APIs or even field mapping the products available through those APIs, but how do we get that data and make it usable with legacy systems, which, especially credit unions, banks, financial institutions that have been around for a while, they're having to deal with. So that's a huge advantage. But I think when it comes to the third party data integration and things like that, it's really that making the data usable.
Yeah,
That's the key, right? Like just getting access to it doesn't necessarily help you. Can you make it usable? And then can you measure it? And can you make it better?
sure, sure. And then as we kind of move from underwriting, like what are you seeing farther up the funnel? Actually, let me pause on one thing you said. You talked about assets. Are you seeing anybody using assets for underwriting?
A little bit.
Yeah,
Although maybe not in the spot. I mean, we kind of touched on it earlier. Maybe not quite the way you would think.
yeah,
So I think when you look at things like progressive offers or cross sell, upsell after that automated decision has been made, we
yeah,
certainly see a lot of people looking at doing that. That's they applied for a $2,000 credit line for retail point of sale type purchase. Well, maybe they'd buy the bigger couch, nicer couch, if you could give them an extra $1,000, right? So we're seeing people make offers that are again more custom tailored to the applicant after that credit approval is made. Some of that alternative data has some real interesting use cases for customizing the offer that's being presented to the applicant, but also making you more money. That's been or you can also do things interesting. It's not quite the same as like uh, customer engagement, customer loyalty. Maybe the terms of the loan could
yeah,
be adjusted. Maybe you could provide a payment schedule that's a little more amenable to the client, a little more applicable to
yeah.
what you see their capabilities are. So I would say that's probably where I've seen it.
And is
you
this
know,
pulling assets from the bank data? Is that the concept? Like you're essentially tapping into the bank data and seeing what their deposit account is?
No, not really. I mean, you can use that data. I mean, people do use the data for that purpose. I was, thinking more about things that you can grab from the alternative data sources that might indicate other things that they have access to.
Okay.
So, you
Okay.
know, like what you guys do with asset data from tax records, right? Where they're
Exactly.
kind
Yeah.
of a picture at a high level, aggregate level of where their assets are. I think that kind of information can be really useful for that purpose.
Yeah, and I'll just jump in on that, Nathan. So, Powerlytics, again, it's a database of IRS tax returns that covers every U.S. household at the zip 4 level. No friction needed to access that data, and we can provide accurate data on a household's income or their total investable assets, or just the portion that might be on deposit, right? And so we actually have lenders now using that for credit decisioning as well. It's not just how much you make, but it is how much you might have on deposit or in total assets. So yeah,
Yeah.
absolutely. Great point. Why don't we jump up funnel a little bit? Tell me what you're seeing um, being used kind of at that acquisition pre-screen stage.
Yeah, that's an area, probably one of the most um, common requests we get from our clients is there's been a huge investment in improving the performance of their credit strategy, the
Yeah.
origination flow. Like they put a lot of time and resources into doing that.
Yep.
Then when it gets to that, marketing end, they can't always. They're looking at lookalike models in the acquisition strategy that don't quite match the origination strategy, and that gap increases cost and hurts their performance. So we quite frequently get questions from people who are trying to how do we tie these two together? How do we make them look more alike? So I would say that's on the acquisition end. That's one area that's been um,
Yep.
a really big key. Um, there's also things that you can do on the front end that on the front end of the strategy. You can look at non-FCRA data as a early filter before you get to FCRA data in the acquisition
Yep.
space. You've got a lot of levers to pull, whether you go pre-screen or pre-qual. So we get a lot of questions around there. I mean, that's actually a question I wanted to ask you. We've chatted about it a few times here and there.
Yeah.
Is where you guys see on the front end of the funnel, in that acquisition stage, like how are they using it? Are they using it in pre-screen campaigns with firm offers? Are they doing, what do you guys see?
They're using it in pre-screen. Was just on a call with a lender who's looking to evaluate it today and wants to use it before that credit pull, right? To be able to kind of kind of get that optimal income profile and then kind
Mhm.
of do that credit pull. But we have a number of lenders who use it for that purpose. We have First National Bank of Omaha who uses it for that purpose in their card business. And so we've seen a fair amount of success with that, right? Being able to use our non-FCRA income data to be able to swap in, more ideal targets, swap out those who are less ideal, and ultimately get a better ROI on that campaign because you're getting a more potentially a more responsive applicant who's more likely to be approved as well.
Interesting. Have you guys seen, I mean, pull the string a little bit on that responsiveness? I mean,
Yeah.
that's common, right? Like the filtering for credit risk is one thing, but trying to understand who should I spend the penny on to send the direct mail to, like that response metric. How have could you talk a little bit more about
Yeah, yeah,
what kind of response?
and not specific to the client that I mentioned, but just
Mhm.
more broadly, we have seen our income data improve both responsiveness and the credit dynamics. Kind of beyond just using income, though, we have 1,500 non-FCRA data variables that we pull from a tax return, and we've done things like created effective marketing response and conversion models for consumer loan offers, right? That improve the ultimate amount, kind of volume of funded loan dollars that come in per marketing dollar spent.
Hmm.
we built a best member lookalike model that's in use now that's in use in the credit union industry, right? Using data from about 7 credit unions to be able to merit kind of match those lookalikes and be able to acquire more high quality, more engaged credit union members. So yeah, I mean, I would say it's not just getting more approvals; it's actually improving some of those marketing metrics as well around responsiveness and conversion.
Interesting. Is there, not to put you on the spot, but is there any particular, attribute or field or whatever
Yeah.
indicator? Like what have some of those indicators of response been?
Yeah, income works pretty well, but ultimately when we build a model, it's kind of interesting. It's often these things we call data transformations that
Mhm.
tend to have the most predictive power. And that could be something like a look at your W-2 income and how that's changed over 1, 3, and 5 years. Or particularly for a subprime offer, income stability, like we can indicate what percentage of income comes from W-2, right? And for a very
I
affluent
see.
individual, that doesn't matter because they're generating wealth income. But think about somebody maybe making $50,000 a year. If that's all coming from a steady paycheck, they're going to feel and behave very different than somebody who may have a very uncertain income. And so those are a couple of examples. Other things would be how someone's income is relative to the average income in their zip code or their county, right? Like, are
Oh
they
yeah.
are they are they relatively wealthy or poor for the area they live in, right? Those things tend to, and it's
Interesting.
often a number of those data points together that help drive that prediction.
So I'm wondering if you have, just thinking out loud, if you've got the kind of that zip plus four level that you're looking at that level of granularity. It's like I'm wondering if there's, you know, market to market differences just between the section of the block you live on or the side of town that you live on that
Yeah,
might be indicative.
yeah.
That's another interesting one.
Yeah, I mean, and it does tend to be pretty consistent within that zip four, Nathan.
Mhm.
But certainly, if we sometimes have clients tell us they want us to just give them zip code data. That is a fairly, I guess heterogeneous, right, area. I mean, not everywhere, but really, it's that granularity of zip four where the value is. When you start to get out to a zip code, you can have pretty inconsistent incomes, wealth profiles, behaviors for sure.
It just makes me think about my zip code is mostly cows. So that's interesting. I don't know if that changes the
Love it.
behavior or
Love it.
not, but
That's funny. That's funny. Hey, let's jump now to the customer or member experience. Tell me what you're seeing there in terms of the use of alternative data.
yeah, it kind of ties back to the similar to the cross sell and upsell motion is I would say how do you treat the client if it's a installment loan you're getting to the end, what do you do to get them re-engaged again? Or if you're some type of revolving line of credit, what do you do to is credit line increase the motion that you want to take? That's a great
Yeah,
opportunity, right? Who are you going to do that with? Which we've been having an interesting conversation about the use of non-FCRA data for credit line increase, and there's some
yeah,
because you depending on which AI engine you ask, you're going to get a different answer. So that's a good one to chat about. I'd like to hear your comments on that.
sure,
But I think it goes back to that decision intelligence term I used earlier. It's like being able to automate a decision based on what you know or data that you can get in real time and tailoring that to your client. Like
yeah,
that's really key. Thinking through all the permutations and being able to design something that fits your goals but also helps your client.
for
That's the
sure,
competitive edge, right? And I'm speaking from a fairly rural area. So, if you're a credit union in a rural area and you're getting your business is being impacted by fintechs,
sure, for sure.
example, in certain lines, right? I mean, that's a really big key differentiator. So,
Yep,
anyway,
and being able to be nimble, right, is pretty
yeah,
critical throughout that member life cycle.
yeah, for sure. And being able to do it in a way that works with the systems you have in place, because you can't just
Sure.
rip and replace everything all of a sudden. That tooling is really important.
Yeah,
But
of course.
you had talked to me about I want to go back to that the FCRA question
Yeah.
about
Yeah.
credit line increase because that's a real common question we get. You said you've been doing a little research on that. Maybe you could.
Yeah. I mean, for credit line increase, we've actually had a lot of success. And it's really less of a question about FCRA versus non-FCRA. We've sat with the OCC and they've given us guidance, right? It's more about modeled versus non-modeled, right? We're a
Hmm.
non-modeled income solution. Some others that people might be familiar with are actually modeled solutions. And if you're OCC regulated, they tend not to like that. So for proactive credit line increases, and we have the two clients whose names I can say are Synchrony, who've been with us for a long time doing this and have had a lot of success. And then FNBO is a more recent client for they're actually a very big card issuer. You have to do an ability to pay calculation if you want to make a proactive credit line increase. Proactive credit line increases are a critical strategy. I came out of the card industry, right? They're critical to be able to keep that customer happy and to be able to kind of grow positive balances or high quality balances. To do an ability to pay calculation, you need a stated income from that cardholder. It can't be more than a year old. After that year, it's really hard to get them to give it to you again. We can be used, Powerlytics, as a replacement for stated income. Even though we're non-FCRA, that hasn't been an issue. It's what they like about us again is that we are not modeled, right? We are data, even though there's some aggregation in it that comes directly from a tax return.
Interesting. That's definitely something that we're looking at building some campaigns around internally because we know we've had clients ask
Yeah,
how they can do that. I'm wondering, like, if the last couple of minutes that we've got together, I'm wondering how that would differ from other types of client interaction or client treatment and
yeah,
collections, or maybe some indicator that a default might be coming up.
yep.
Indicator of potential payment default or things like that. That seems to be more of a live type call. What kind of uses have you seen on the maybe the customer treatment or default side of things?
Yeah, I mean, I guess what I would say there, we've worked with banks, lenders in particular. I don't know, and then credit union data as well
Mhm.
to be able. This is probably more on the collections end, right? To look at delinquent accounts, use our data to be able to predict who's going to default by day 90, who's going to end up paying by day 90. We actually built a model that um, when you broke all the data into deciles, the top decile had a 4 times greater default rate than the average. This was for an auto loan, credit union auto loan,
Right.
using data from 30 credit unions. So our data, and I think probably other alternative data, can be very predictive, whether the person's delinquent or whether they're current, in terms of understanding that likelihood to default. And I don't know if you're seeing the clients you work with, use data like that to try and understand that risk throughout the life cycle, particularly in collections. Is that something you've seen, Nathan?
It is. I mean, in general, the whole decision intelligence and speed of iteration and those kinds of, I mean, that's obviously a consistent theme with us. But one of the interesting nuances of that is the practical application of that in testing new things in a collections use case or in a default, trying to anticipate default. Um, that's where I've seen people make the calculation of, hey, I could pay for the really expensive trigger
Yeah,
from one of the bureaus, or I could, one of the new startups, I could pay for the really expensive data to make this. Or maybe what I do is I do some shadow testing or some champion challenger testing in the limited market and
yep,
try to understand this. And sometimes what they find is there's some great alternative data out there
sure,
that will do the trick for them, right? Like the extra cost isn't necessarily worth the little bit of extra performance you get out of it. So
sure,
that's another really common thing that we see is people getting comfortable with, hey, there's great ways to test these things with alternative data
for
and
sure.
get motion quickly, get some progress quickly, learn quickly about our market and ways that, maybe we couldn't have done if we used something that was more expensive.
Yeah, for sure, for sure. Hey, I've been a little remiss here because a couple of questions have come in. One of them
Okay.
was about drop off in the application flow. I think we covered that already. The second one, which we haven't covered at all because we've been talking consumer, as an SMB lender, what sources are you seeing being used in the SMB lending space? So Nathan, do you want to opine on that?
All over the map.
Yeah,
It's a really hard one. Like
it is.
the the first, I think the first challenge that I see most often with SMB is just identifying the individual company. I mean that
Yeah,
matching
yeah.
it up like the what do you call it? The KYB
Know
instead
your
of
customer,
KYC,
know
right? I
your
mean that's
business. Yeah,
there's a lot of companies out there we partner with that do a good job of this, but it is not an easy thing. It's easy to mess up, and there's so many different business structures that look like individuals, sole props, and things like that. So
yeah.
um, after you get there, when you start looking at credit risk, that becomes even harder
It
because
does.
DMB may not even have a number for them, especially if they're a small business.
Yeah,
So that's an area where I think alternative data has a lot to offer. But again, you have to disentangle the business owners from the business itself and try to figure that piece out. So
yeah.
I think there's a lot of work, but there's also a lot of potential for improvement there that will help our clients.
Sure. Yeah, like you said, I'm seeing a lot of innovation in the KYB space. There's a couple of, sort of a couple startups who I think are doing a good job there and
Yeah,
trying to really build powerful databases that can help understand if that business is a real business that's still open, that type of thing, right?
right.
Um, Really gets tough around trying to understand like the revenue of a business. D&B has been the standard out there for a long time. I mean, I will say with our business data, we have developed three partnerships with very large data companies who are using us for our data for revenue estimation, sometimes directly, sometimes as part of a model they're using. So there's some good solutions out there. And then S&P Global actually uses us in their probability of default model. They've been doing that for a couple of years. So data is predictive and default. And we've had some pretty, you didn't talk about acquisition, but like small business targeting is another area where I think alternative data can be quite powerful. Powerlytics can be part of that formula, but really getting smarter about who you're targeting. But yeah,
Yeah,
definitely a far less mature space than on the consumer side. Far tougher to get good data on.
it is. But I think the kind of the arbitrage opportunity is certainly there
Yep.
because there's been so much sophistication on the personal lending side or the big commercial side that the the small business side is hard. It's a hard nut to crack, but if you can,
Oh
there's
yeah.
enormous growth. Like I mean, just us last year, it was our largest growth category last year
Yeah.
was
Is that
lenders
right?
into the small business space,
Yeah.
and so that's been a big area of focus for us.
Very good. A couple more questions I think may have come in here. Nope, same questions. Well, why don't we take a quick pause here and just see if there are any other questions before we wrap it up? And maybe while we're waiting for those to come in, Nathan, I'll kind of put you on the spot here and ask you for some words of wisdom or advice for credit risk leaders for 2026. What would Nathan George tell them would be some good things to focus on as you think about the rest of the year?
Yeah, I think starting with an ideal use case, like what is it that you want to accomplish is more important than getting pressured into testing something that you don't really know why you want it yet.
Yeah,
Like AI is something that kind of falls into that category. You've got to report AI initiatives to the board or whatever, but being really intentional about what is it that we're wanting these tools to accomplish for what line of business and what type of client, doing the normal homework that you would do in building a new product. That's really key. And second to that is making sure that you've got the test and learn capacity. You've got the tool set, the people, the support you need to do that. I mean, that
yeah,
those are really the two key things I would say. And then, you know, there's lots of new things out on the horizon that if you can test and iterate fast, there's lots of new things you can take advantage of. And you don't. lots of alternative data, not just alt data, the way we talked about it, but alternative solutions to
Sure.
get the answers you're looking for on risk and things like that. So being open to exploring those um, smartly is important.
Yeah.
I think that'd be the three things.
Yeah. And I do hear a lot like we'd love to test that, but we don't have the capacity, right? And so
Yeah,
and I
yeah,
think GDS Link, you're a solution that I think enables that in a faster, smarter way. Is that right?
for sure,
Yeah.
for sure.
Very good. Very good. Well, with that, Nathan, we have one. Let's see. Okay, that's a little message from Joe to the panelists. What did he say there? Sorry.
I think it was just popping our info in there in case anybody had any other questions or
Okay,
wanted to
very,
chat with
very
us.
good. Yeah,
Yeah,
like
no, I put both your email addresses. I put both our websites. So,
very good.
and thank you guys for this. We're going to send out the recording to everyone afterwards. But yeah, please carry on.
Very good. Well, and I'll just reiterate, thank you all for joining the webinar today. Thank you so much, Nathan. Great conversation. Always enjoyed talking to you. And everybody have a great day.
Thank you all.
Thank you. Thanks all.